Good morning, viewers. Once again, you are welcome to Sunday Ilogbonga Akoni online tutorial. So, the title of the course we are taking is Advanced Audit, Assurance and Forensic AAAF, and the topic of our lecture for this morning is Laws and Regulations on Audit and Assurance Engagement, Part 2. Part 1 of the lecture has been treated a few days ago, and in that lecture we mentioned why regulations have to be put in place, and it is because of public interest. That's why audit and assurance engagement has to be regulated. Then in that lecture we also mentioned about appointment of auditors. We discussed the removal of the auditor, and we also talk about resignation of external auditor. We went on to discuss eligibility to be an external auditor, and we mentioned here that eligibility to be an external auditor depends on membership of a particular regulatory body, such as ICANN in Nigeria. That is self-regulation by the profession itself, by the audit profession. Then the next one, which is an alternative to the self-regulation, is regulation by the government. Regulation by the government. Regulation by government. So that is regulation by government. That is the alternative to self-regulation by the accounting profession itself. So we see that the government can appoint a public body with similar responsibilities as that of the self-regulating regulations. So, and that public body will now put procedures in place for approving and authorizing individuals to perform audit work. They will also ensure that authorized auditors possess necessary minimum skill and knowledge to perform their audit work. Then they will also handle complaints and take disciplinary action or measures against members where appropriate. So, in addition to what we have discussed earlier, it is also usual for statute law to establish that certain individuals are ineligible to act as an external auditor, and the reason for that is for the independence of the auditor to be maintained. In Nigeria, as per section 403 of CAMA, that is Companies and Allied Matter Act of year 2020, the following people are prohibited from being an auditor of the company. So you see them. So in the context of a given company, the following individuals are prohibited from being an auditor. So number one, or A, as we wish to call it, is an officer or servant of the company. Then B, a person who is a partner or in the employment of an officer or servant of a company. And lastly, we see a body corporate. So the following individual too, individuals are also prohibited from acting as an auditor of a particular company. So we see that those ones are what is statute law prohibiting from being an auditor of a company. Then the following individual are also prohibited from acting as an auditor of a particular company. So we will leave them on the board for you to see. Number one, a debtor to the company or any of its subsidiary in an amount exceeding 500,000 naira. 500,000 naira. Then a debtor to the company or any of its subsidiary in an amount exceeding 500,000. Then B, shareholders and their spouses. And you are a shareholder in a particular company, you cannot be an auditor of that company, and your wife or your husband, as the case may be, cannot be the auditor of the company. Then C, a person who have an interest in keeping the register of individuals holding debenture in the company. Then lastly, a person who is an employee of or consultant to the company who has been engaged for more than 1 year in the maintenance or preparation of the company's financial statement or financial statements or records. Full stop. So that is that about that. So the next thing that we're looking is rights and duties of an external auditor. Rights and duties of an external auditor. That local statute law impose certain duties on the auditor and grant him certain rights or power to enable him carry out his work effectively. The first thing that will be treating is the duties of the external auditor. So the main duty, the primary duties of the external auditor is to 1. Examine the company's financial statement then second one is that write an audit report on the financial statement which is to be presented to the shareholders together with the financial statement. Together with the financial statements. That's that. Then E is also required to examine the company financial statement, write an audit report on the financial statement. Okay, the auditor's report sets out the opinion of the auditor as to whether or not one, the financial statement give a true and fair view or present fairly the financial position and performance of the company. Number 2, whether or not the financial statement give a true and fair view of preserving the financial position and performance of the company, or and have been prepared in accordance with the applicable financial reporting framework. So these are the duties of the external auditor. So the number 2 here say I will prepare in accordance with the applicable financial reporting framework. So applicable financial reporting framework is made up of the legislation in a particular jurisdiction and standard accounting standard. For example, in Nigeria, we have laws that are guiding financial statements, such as Company and Other Matters Act 2020, for instance. Then we have BOFIA, Bank and Other Financial Institution Act 2022. Then we have Financial Reporting Council of Nigeria Act 2011. Then we also have Insurance Company, Insurance Act 2003 and so on and so forth. Then when we are talking of standard, we talk about IS, that is International Accounting Standard and International Financial Reporting Standard. So those are what make up the applicable financial reporting framework. So the next thing that we looking at is the right of an external auditor. So that one is addressed by section 407, section 4010, 410, 2020. So see that right. So the first right is that a right of access to all accounting books and records at all time. See that at any time of the year, the SOA auditor can come to the company to check the company book and record. It is one of the rights the SOA auditor have to check your journal, your sales register, your ledgers, and so on and so forth. Then the second one, right to all the information and explanations that is from management. Necessary for the proper conduct. Just for the proper conduct of his audit. So the auditor has right to approach the management at any time to make inquiry on issue he believe will help him to complete his audit. Then third one, right to receive notice of all share holders meeting and all shareholders meeting such as annual general meeting, as annual general meeting and to attend those meetings. That's that. Then the next one here is right to speak at shareholders meeting. Right to speak at shareholders meeting on matters affecting the audit and the or the auditors. So the auditor also have right to speak in the meeting of the shareholder on matters affecting the audit or the auditor, and that is very important in the situation where there is disagreement between the auditor and the director of the client entity. So if there is no other effective method through which the auditor can communicate with the shareholder, then he can communicate when they are in the general meeting. So you communicate when they get to the shareholders meeting. Right to speak at shareholders meeting on matter affecting the audit or the auditor. This can be important if there is disagreement. If there is disagreement between the auditors and directors of the client's entity, and there is no other method to communicate effectively with the shareholders on the matter. And the last one is that if the company uses written resolution the auditor should have the right to collect a copy of all such resolutions. Number 5 say if the company uses written resolution, the auditor should have the right to collect a copy of all such resolution. So written resolution is the written version of the resolution that member of the company have made verbally. Maybe when they are holding their company's staff meeting, when they are holding it, they have resolved to go and borrow 500 million naira from GTB or any bank, whichever one they like. So they will put it down in writing, and two of their director will sign it. Once they have signed that written version, it has become a written resolution. So the auditor has right to collect that copy because it will serve as an audit evidence when he is auditing the company financial statement. By the time he sees 500 million naira under long-term loan, he will be able to know where it is coming from. So that is that about that. Then we now move to okay, that is that about right of the auditor. So the last thing that we considering is responsibilities of management and those charged with governance. So when we say management are the staff of the company that assist to the day-to-day running of that company, and their head is the managing director of the company, whereas those charged with governance are those that set strategic direction for the business of the company, and they are headed by the chairman. They are mostly non-executive directors, but of course you know that the two responsibility can sometimes overlap. For example, when they are holding meeting to set strategic direction for the company, there is no how the managing director of the company can totally accept it. So that is that. But primarily the duty of the management is to see to the day-to-day running of the business, and they are being headed by the managing director, whereas the duty of those charged with governance is to set strategic direction for the company. So, and they are being headed by the chairman, and the members that made it up, they are the non-executive directors, as I have mentioned earlier. You see, contrary to the general belief of the public, some public member they thought that it is the auditor that prepare the financial statement. No, it is not the primary duty of the auditor to prepare the financial statement. It is the primary duty of the management of the company and those that are governor to prepare the financial statement. So their duty, number one duty, a preparation of the financial statement. Yeah. That is that. Then B now. So contrary to some people believe, they thought that it is the auditor that prevent fraud and error in the company. No, it is the duty of the manager and those type of governor to see to how fraud and error will be prevented in the company. So prevention of fraud and errors. Then lastly, it is the responsibility of management to design and implement effective internal control system. Design and implementation of effective internal control system. So that is that. So, and it is also additional duties will include duties will include provision of one, information to the auditor relevant to the preparation of the financial statement. Then 2, additional information for the audit. And 3, unrestricted access to individuals which the auditor need access to complete his audit. So see, then the last one is that provision of written representation to the auditor at the end of the audit. So that's number 1. Information, they provide information to the auditor relevant to the preparation of the financial statement. There's additional information for the audit. They are unrestricted access to individual which the auditor need access to in order to complete his audit. In order to complete his audit. In order to complete his audit. And they are also to provide written representation to the auditor at the end of the audit. So thank you very much for watching. That will be the end of our lecture for today, or on the topic laws and regulation on audit and assurance engagement part 2. So by the grace of God, the following part will be presented shortly after now. So thank you. If you need to reach me, you can reach me on this contact. So thank you very much for watching. See you in our next lecture. Thank you.